Did you know that despite the decline, the price of Tesla shares is predicted to skyrocket as a result of the impending stock split? The price of Tesla shares is currently close to $700. It's surreal to consider that this might get worse after the breakup. Continue to watch and listen to discover more about this. Currently, a share of Tesla stock costs $752.29, a gain of 2.54% from the previous trading day. The stocks of the major electric vehicle manufacturers are highly valued. More than this by professionals and investors, given the status of the economy and the volatility of international events. The post-split price growth could be more or lower than the aforementioned predictions. Learn why the 3-for-1 stock split of Tesla will result in the stock price skyrocketing in today's video. Tesla's annual stockholders meeting is scheduled for August 4th, 2022. And the company has provided detailed information regarding its plans for the meeting in a 14-day SEC filing. Among the many agenda items listed in the filing is Tesla's intention to split its common stock buying a 341 ratio, which will triple the number of available shares. This step has no effect on the company's market value, but instead increases the availability of common shares of publicly traded firms at a lower price, making them more affordable for novice investors. In the case of a 2-for-1 stock split, shareholders of a company whose stock is currently trading at $100 would instead own 2 shares, each of which would be worth $50. However, according to Reuters, which cited this information, companies that engage in stock splits typically outperform the market. According to Bank of America research, this may be because investors buy stock in a firm after it splits on the belief that the new company will have more reasonably priced stocks. If you currently own 1 share of Tesla common stock, you will receive 2 more shares as a result of a 3-for-1 stock split approved by the company's board of directors. They believe this will increase access to Tesla stock for employees and investors alike, according to the doc. Companies may resort to stock splits to make their securities more affordable to individual investors once their stock prices have escalated to exorbitant levels, hundreds or thousands of dollars per share. Being the only company to offer all of its employees the opportunity to join in an equity incentive plan, the stock split will give our employees more options for allocating their ownership. According to Tesla's SEC filing, the authorized share adjustments are being made so that the firm can split its common shares 3-for-1 in order to issue a stock dividend. The corporation stated that its board intends to approve the stock split subject and contingent upon stockholder approval of the authorized shares. They went on to explain that as of June 6, 2022, there were a total of 1,036,390,569 shares of common stock in circulation. At this time, there aren't enough authorized shares of our common stock to implement the stock split at 2 billion, due in large part to Tesla's very competitive remuneration packages, which include the opportunity for every employee to earn ownership for employees to have more equity management alternatives. We've been able to recruit and retain outstanding personnel. The company thinks a stock split would help to stabilize the price of its common stock. Recently, the general public has shown a lot of interest in our stock. If the stock split proposed for this year is authorized, we intend to increase the price of our ordinary shares for retail stockholders. In less than 2 years, the stock has been divided twice. On August 11, 2020, Tesla announced a 5-for-1 stock split that became effective on August 31, 2020. Following the split, the price per share fell from $22.13 before the split to $442.68 after. At the time, the price of a share of Tesla stock was close to $1,300. However, after reaching a record high of $2,000 per share, the stock split announcement caused the stock price to reset to around $460, giving the company a new valuation of about $430, in line with the rumored stock split. What do you think of Tesla? Despite numerous obstacles that have hampered Tesla's production, leave a comment below and let us know what you think. Battery. They believe that because Tesla has its own battery building and factories in production, the firm is uniquely positioned to achieve greater margins with its batteries and actually deliver, which is important because batteries are the primary bottleneck for the EV sector, according to UBS research. Target. They choose to adopt a year-long perspective. The higher growth and profitability is anticipated to be a direct result of Tesla's vertical integration semiconductor software, and Tesla's gross margins may rise from their current level of 30% with tax breaks to 34.7% without them. The investment bank Ops has increased its recommendation on Tesla to buy, signaling that it now anticipates the electric vehicle stock to increase by more than 50%. Despite its stock price, the majority of people still believe investing in Tesla is a good decision. This is true of both casual investors and experienced specialists who are always searching the market for potential shares. Since the stock market, including Tesla, is unpredictable, potential buyers should research the stock's performance before making a purchase. It's understandable to be tempted to take advantage of a cheap opportunity to purchase a previously expensive stock before buying the stock. Buyers should make sure it fits in with their portfolio. However, one shouldn't go all in, for example, simply to hold Tesla shares and less doings, says Robert Johnson, a professor of finance at Creighton University's Hyder College of Business. Splits are popular among investors because they demonstrate that their money is going to a successful business. According to Stivers, if you were interested in the company before the split, now is a good time to buy. You should only do so, though, as part of a diversified portfolio. While it's not easy, it is possible to make a lot of money in the stock market. You don't need a lot of money to make a lot of money investing. All you need is a good plan. Amazon should be more accessible to the average investor. For stock market investing to be effective, you need a strategy. Financial professionals are aware that stock prices fluctuate greatly. The value of the stock market is simply the sum of all the stocks that investors currently own. Since 1928, the market has experienced annual gains and losses ranging from 52.6% to 43.8%. However, the market has recovered on average by 10%. In contrast, the average return on 10-year government bonds is currently 4.8%, while the typical savings account only yields 0.09% annually. Despite numerous issues and setbacks, it is undeniable that Tesla remains at the top of the EV market. Investors of all stripes, including seasoned pros with deep pockets, are confident in the EV company's ability to outperform all logical expectations for future growth and prosperity. No investment in the stock market should be regarded as risk-free, but there are nearly endless possibilities. For additional details on Tesla stock, view the other videos on our channel by clicking here.